anything of value can become a token in a ledger, in a blockchain, and be secure. And the reason I call it the truth net is in the old days, to transfer value, we needed trust. And blockchain growth, I mean, I hate to say it too strongly, but I am prone to hyperbole, but it's collapsing. We've had back-to-back, negative quarters of GDP growth in the US, and it was like, oh, well, that's not a recession. I'm like, well, no, that's not the only definition of recession. It's historically, 90+% correlated. But yeah, there are four big indicators, and some of those are still wobbling above recession levels. And the NBER will determine 6 months from now whether we were in a recession or not. But irregardless of whether we are or aren't, global growth is slowing, whether that's in Europe, whether it's in Japan, whether it's in emerging markets. China's economy nearly ground to a standstill because of their zero COVID policy. And I think all of that has to do with high school wrestling. I had this great coach, and he had two things that I always remember, and I quote him all the time. You'd be out there and you'd say, "Hey, I can't breathe." He's like, "If you can talk, you can breathe. So, get back to work." And the second was, where the head goes, the body follows. So you want somebody's body over here, push their head and their body will go there. And look, if growth slows, profits are going to slow. So it's unlikely that this massive profits recovery that people keep talking about is going to happen. And we've seen evidence of that in some of the reports. And I think that, led to the final capitulation of some of those stocks, like you mentioned, the Pelotons and the Zooms that went down so much. But everyone says, "Oh, but Mark, the last couple of weeks, the market's zooming." Okay, yes. Couple things. One, there has never been a 4% up day in a bull market, ever. Okay, so we had a 4% up day a couple weeks ago. Well, wait a minute. Well, isn't that the definition of a bull market? No. Definition of a bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. Okay. A bear market is a market that goes down most days, but goes up sharply on good news or perceived good news. So, when a company comes in and says, "Well, we didn't lose as much as we thought we were going to lose," that's not good news. That's perceived good news. So if you look at volumes in the markets, they're anemic. That's the perfect time for a short squeeze. So we were in free fall through the middle of June. We got to a point where everybody was out on vacation, and the bots can come in and engineer a short squeeze. And I think we've seen some of that, because the data that I see relative to growth and earnings still pretty ugly. Again, here's the hard part of markets. And if markets were easy, then everybody would be managers, and I wouldn't have a job. It's simple in theory, right? Buy low, sell high, yada, yada, yada. But it's really hard. And one of the things about investing, you actually make the most money when things go from truly awful to merely bad. And that's kind of the law of small numbers, right? So when things have gone down a lot, let's say you go down 80%, so now you got 20 cents on the dollar, and you go back to only down 70%, so 30 cents on the dollar, you've gone up 50%. So you make a lot of money. And so I think there's a little bit of that going on. It's possible that the cathartic deleveraging lows have happened. And I will say in the crypto markets, which we'll talk about later, that has happened. I think we've seen the lows. The problem for broader equity markets is the amount of leverage in the system, margin debt, is still the second highest in all of history. And so there's still a lot that could get unwound if we get a kind of, September, October tough period. But the Europeans do August right. Everyone just leaves and nobody even pretends to work. But post Labor Day in through October has always been a really tough period for markets, because people are coming back to work. They're looking at the stuff going, "Ooh, yeah, those numbers don't look good." And the one thing that drives me crazy right now about earnings is, you have this process. A year ago, company tells us, we're going to make $1. 9 months ago, oh, we're going to make 75 cents. 6 months ago, oh, we're going to make $0.25. Last week, oh, we're going to make 10 cents. And then they come in at 11 cents and everybody's happy. That's a positive earnings surprise. I'm like, how is that a positive surprise? You told me you were going to make $1. Now you make 11 cents. That's not positive. That is ridiculous. So I think that's kind of what's likely to happen. There could be another leg down. There could be a cathartic realization that growth is slowing, profits are going to be bad, and that things really are looking a little ugly when people come back to work in September. But that said, that doesn't have to happen, and it may have already happened. And if that's the case, then there probably is some window of opportunity to start accumulating, good companies at low price. There's still a whole bunch of really bad companies that are still around, right? I mean, 40% of, I think I have this right, 40% of the S&P 1500, right? So the top 1500 stocks can't even service their existing debt. Forget paying it back. Wow. They could never pay it back, but they can't even cover the debt service. And in a rising rate environment, that's not going to get better. It's going to get worse. So I do think we need to let a few more of those companies go away. Everybody's like, oh, why are you always rooting for recession? Like, I'm not rooting for recession, but I don't fear recession because recession, like winter, is necessary. It's part of the cleansing, right? If we don't have winter, then we don't have good springs. We don't have good crops because you let all the bad stuff cloud the ground. So we need winter to come in and kill off all the weak stuff so the strong stuff can thrive. Same thing with businesses. So here's the crazy thing. The Fed, right, has this group of PhDs, all these people to predict the future, right? GDP. They're over. But they're over. Like, I could flip a coin and be close to 50%, but they're over. I mean, you have to work really hard to be over. So yeah, economists are what's one profession that makes, actuaries look lively or something like that. I mean, it's just, I don't know, it's a dismal science for a reason. And the thing that's interesting about recessions, and again, I don't cheer for them, but I believe they are necessary. And what I do like about them is, yes, I feel for every family that's impacted by, a worker being displaced. Feel for it. But here's the amazing thing. Some of the best companies in the future are created in those times of strife because it turns out if you get fired or if you lose your unemployment benefits, you find a way. From the depths of, I'm fired, what am I going to do? I got to feed my family. He started business. And there are lots of those examples. I mean, I am not a 30-something black t-shirt wearing crypto kid, right? I have white hair. Yep. I don't look like all the other people doing crypto. And sometimes people look at me like, really? You do crypto? I'm like, yeah, why? Because all it is technology. All we're talking about is an evolution of computing power. 14 years later, there's this innovation called the internet. And I was at Notre Dame and, Fighting Irish on the wall behind me. And we put $500K in this little company with a stupid name called Google and took out $200 million. There should be a quad at Notre Dame called the Google Quad. 14 years later, there's an innovation around mobile telephony, the mobile net. And now, everyone has a mobile phone. In fact, I was back in Seattle at Craig McCall's house, an early pioneer in mobile, and I asked his family office guy, I think the mobile net is going to be as big as the internet? It's like, Mark, are you kidding me? Ask me if they want a computer, like whatever. Ask them if they want a phone. They're like, I already have two. I probably don't need another one. Yeah, the mobile net's going to be a big deal. Well, now we have the truth net. What's the truth net? The truth net is blockchain technology. All blockchain technology all it is a ledger that instead of being private and owned by centralized companies like Microsoft or Amazon or whoever, and existing in CPUs in a server in the cloud, now can be open, public, owned by no one, right? So it's a permanent source of truth, and it displaces the need for private databases. Blockchain technology's use cases, one is Bitcoin. Bitcoin is a blockchain. It is a perfect store of value. It's basically digital gold. Gold, the only money in the history of the world. Everyone said, no, I got money all the time. I got dollars, I got yen. No, those aren't money. Those are currencies. JP Morgan said it best. Gold is money. Money is an asset that exists in the absence of a liability. So every currency in the world is backed by government debt. Bitcoin is as good as gold, meaning it's equally scarce, which is what makes gold valuable, its scarcity. And yet it's more divisible and more portable. Right? If I had a bar of gold and I wanted to break it in half and give you half, really hard to do. If I want to send you half a Bitcoin, instantaneous. If I want to take that bar of gold and stuff it into the TCP/IP internet protocol we're using right now, it doesn't work. But I can use that protocol to send you Bitcoin instantaneously. And because it's an open public ledger that's cryptographically secure, I can know as soon as I transfer that value to you. And this can be anything of value. It can be a Bitcoin, it could be a car, it could be a house, it could be a stock certificate. Anything of value can become a token in a ledger, in a blockchain, and be secure. And the reason I call it the truth net is in the old days, to transfer value, we needed trust. And blockchain replaces trust with truth. 800 years, we've had this banking cabal that has been the trusted third party. So any value exchange had to go through this banking cabal owned by the Rothschilds and the Medicis and the Morgans and the Rockefellers, et cetera. And so those guys got fabulously rich, and the rest of us had a good life. Fractional reserve banking has actually made the world a better place. But what it also did is led to a concentration of wealth, the likes of which we've never seen.